There may be nothing more unnerving for households than to learn their bank has suddenly closed its doors. But it can happen, and when it does, the only question on the minds of depositors is, will I get my money back? Welcome to Economics Made Simple. Please remember to like this video and click that subscribe button to make sure you don't miss any future episodes. To help us gain a clearer understanding of what depositors actually face when their bank is shuttered, we've brought in a special guest.
Thanks for having me back again. It's big news when a bank fails. The failure can trigger a wave of anxiety throughout the economy as observers wonder what it could mean to the financial system. Thankfully, however, bank failures usually don't have implications beyond those that pertain directly to the financial institution's depositors, creditors, and shareholders.
So wait, why does a bank fail anyway?
Banks are businesses like any other, which means they can become insolvent just as other businesses can, from such culprits as poor management and economic downturns. One common way for a bank to fail is as a result of what's called a bank run. If customers have concerns about a bank's condition, they may rush to the bank to withdraw their funds. If a significant number of customers do that all at once, and the bank doesn't have enough cash on hand to honor all of the simultaneous withdrawal demands, the bank run itself can lead to the failure.
Okay, so let's say the bank has closed and I'm a depositor. What happens to me and my money?
That's a great question. When a bank fails, the impact on most depositors is usually not as great as they likely fear it's going to be. In fact, for depositors, bank closures can be relatively uneventful. For now, the FDIC, Federal Deposit Insurance Corporation, initially takes over a bank when it closes and sets up what's called a bridge bank. A bridge bank is a temporary national bank chartered by the comptroller of the currency and administered by FDIC personnel. Account access for depositors is immediately restored with the creation of the bridge bank. But this isn't a permanent solution. The FDIC will run things until it can find another bank willing to step in and take over the assets and operations of the failed institution. In the event no buyer can be found, the FDIC will begin the process of formally liquidating the failed bank and reimbursing depositors.
That's the part I want to know more about. So, depositors of a failed bank do get their money back, right?
Well, that's the good news, to the extent there's any good news when a bank fails. If it turns out that a bank must be liquidated, deposits that are under the limits of FDIC insurance will be fully reimbursed. Since the FDIC began providing deposit coverage back in 1934, no customer has lost even a penny of insured deposits.
Okay, that does make sense, but you said insured deposits. How much are deposits insured for?
FDIC insurance covers deposits up to $250,000 per depositor per insured bank for each account type. This means you can have more than $250,000 covered at a single bank, as long as the money is allocated across multiple accounts, each representing different ownership categories. Examples of ownership categories include single accounts, joint accounts, retirement accounts such as IRAs, and trust accounts.
Okay, it sounds like making sure that deposits stay within FDIC coverage limits is the best way for bank customers to ensure their money is safe in the event of a bank failure.
Yes, you are correct. Bank failures are big news when they occur, but the consequences for bank customers can be limited to minor inconveniences if they're made sure to keep their deposits within FDIC coverage limits. Like I mentioned before, as with anything, past performance is not a guarantee of future results, and we never know what will happen in the future.
This is great information. Thanks so much for explaining this to us.
Of course, I'm always happy to explain. Thanks again for having me on.
Well, that's it for today's lesson. If you enjoyed this video, please don't hesitate to hit the subscribe button and watch for more Economics Made Simple.